Well, it's been fresh highs, but not much else for global markets. Hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday the 21st of May 2024, and before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for you. So the big news of the past sort of week is that US CPI has come in lower than expected, and that is a measure of inflation. So US CPI coming in lower than expected basically says that inflation is continuing to fall. It comes after stronger than expected readings in January, February and March, and it basically says to the market that perhaps inflation is going to get back to target range after all, and that means that we might see rate cuts this year, either in July perhaps or even September from the US Federal Reserve. This is basically everything that markets wanted to hear, and it did allow US markets to set fresh all-time highs in the sessions afterwards. After that reading, we did also see lower than expected US retail sales, and again, that's a deflationary signal. Again, it suggests that people are spending less, and when people are spending less, it's much harder for prices to rise. So overall, it does look like the battle against inflation is starting to swing back in favor of inflation coming down. And like I said, that's a very positive thing for share markets. So US markets pushed into fresh all-time highs. Our own Australian market did push back to its own all-time high. But like I said at the start, since then, markets have really failed to proceed. They've struggled to advance much further. And, I think it does point to people drilling a bit further into the inflation data. Yes, the headline number came down, but there were some certainly sticky parts, especially on the core inflation data. There are certain things that are still rising well above where, policymakers will want them to be. And so it did give a bit of pause for thought, and it did sort of suggest that, yes, inflation's coming down, but it is remaining a lot stickier and it's not coming down as quickly as expected. So it does point to the higher for longer story, but it does give markets perhaps a glimmer of hope that we will see rate cuts this year, because after January, February and March, people were starting to worry that they weren't going to come until 2025. And just on that, this week we are seeing the central banks, at least here in Australia and the US, give their full meeting minutes to their meetings at the start of the month. So today we had the RBA meeting minutes, and they basically came out and said nothing new. If the statement at the start of the month was a cut and paste job, well, so were the minutes of this meeting. Really illustrated that the RBA is really unwilling to change any of the content of their statements or their publications, just in case people interpret them the wrong way. So they're trying to look really steady, look really sort of like they've got everything planned out and that everything's going according to plan. And that was basically the case with these minutes. In fact, reading the last paragraph of the minutes, it was very much just an extrapolation of the statement they had from their meeting at the start of the month. So the market had no response to the RBA meeting minutes, and I wouldn't have expected any other really, unless there was something crazy in there, because really the meeting minutes told us what we already knew. We will also see the US Federal Reserve give their meeting minutes on Wednesday night. Now, I suspect there'll be a stronger market reaction to these minutes. I think the market will be looking for any clues as to how their FOMC, the committee that they have that votes on interest rates, how their opinions have formed, with the recent data points. Now, it won't include the most recent CPI reading. It won't include those retail sales, but it will include, April's data releases, and it will sort of give us a gauge as to how much of the board is fairly dovish from here, how much of the board is fairly hawkish from here. I think importantly, the greatest dove and the greatest champion of the market has been Powell himself, Jerome, and I think that'll probably shine through in the minutes. So I do think we're likely to see some reaction from the market with the minutes. It's not guaranteed to be any direction. Keep in mind it doesn't include the recent CPI reading, which was perhaps the most deflationary data point we've had recently. And I do think that the markets will be really drilling into the words and looking for any clues as to sort of how the board sits in terms of rate cuts this year or not. At the same time as those minutes are coming out, or perhaps a few hours later, we're actually going to see the NVIDIA earnings report. And NVIDIA's been one of the big driving factors behind the strong market movements for the past 6 months. A lot of the market has been pushed higher on a view that AI is going to increase earnings, cut costs, and so Nvidia's earnings result will also be quite important for the market, and that's going to occur on Wednesday night after US markets have closed. So Wednesday is going to be a pretty big one for markets in an otherwise fairly quiet week for data. The other thing I wanted to touch on was iron ore. Iron ore prices have pushed back up over the past week, and particularly on Monday, they've pushed up quite a bit. And that comes on the back of some Chinese stimulus that has been announced. So over the weekend, the Chinese government announced they were taking measures to support their domestic property sector. They were encouraging local governments to buy up unsold residential property developments to turn them into public housing. They were cutting lending requirements or lending restrictions, lowering the amount of deposit people had to have to buy property, and doing a bunch of other measures that are aimed at supporting the property sector. Now, iron ore, people speculated would benefit from this, and indeed people bought up iron ore on the back of the announcement. However, it really didn't sort of progress beyond that day, and in fact today we actually saw it drift back down a little bit. I've read a lot of commentary from economists that basically say that this probably won't be enough to sustainably increase iron ore demand, and there are a lot of, negative factors for iron ore here as well. Steel smelters, for example, the average steel smelter in China is once again unprofitable. This is a cyclically low period of Chinese iron ore demand, and it's overall a bit of a mixed bag for iron ore, especially when you consider that it has pushed up a fair bit over the past week. So iron ore prices, they've pushed up, but they're still quite a way below their January peak, and now we're just waiting to see whether or not they can go back to that peak or whether they'll come back off from here. But like I said, cyclically, this isn't the strongest period for prices, so just something to watch in the coming weeks. So let's have a look at the chart for this week, or the charts I should say. So we'll start with our own market with the XJO, and we can basically see that it did bottom out in April here, and then at the start of May it started pushing back up. And that occurred with the Federal Reserve meeting and our own RBA meeting at the start of the month. And then we pushed back up to the all-time high late last week, and that was after the US CPI reading, that inflation reading I was talking about. So that allowed our own market to go back to the all-time high, but we really failed to progress from that level. We got to the 7,900 point level and we stalled out there. And for the past few sessions, we've really just been drifting sideways. So that leaves our market in a bit of an ascending triangle pattern. We've got the higher peaks and troughs, so that means that we've got a short-term uptrend here, but we've got that key resistance level as well. So we're just waiting to see if we can break into the fresh all-time highs above 7,900, and that would indicate further upwards movement, or whether we break lower and break below that uptrend line. And again, that would indicate further downwards movement. Overall, you do expect that things will break in the direction of the underlying trend, so you do expect a break higher, but I would caveat that by saying our prices are extremely high up here. Our market is mostly banks and miners. Bank share prices are extremely stretched. We've got the most expensive banks of the developed world. And our miners, though they aren't that expensive in comparison, they are still fairly expensive relative to recent history. Especially if you consider that iron ore prices aren't quite where they were at the start of the year. A silver lining, though, is some of the secondary base metals have been doing extremely well. Copper's at all-time highs, gold is at all-time highs. Other base metals have done very well as well, and maybe that'll provide a bit of a tailwind for our market. So at the moment, just in the point of an ascending triangle, waiting to see which way we break. For the US market, they did actually reach a fresh all-time high after the CPI reading, but they didn't go much further. So after the CPI reading, the US S&P 500, it got to 5,300, and since then it's really been tracking along that 5,300 level. I do have a short-term uptrend line drawn in here. It's not a very good trend line, but it just illustrates the sort of upwards movement that they're on. And again, they formed some resistance at 53.20. Should that break, we'd expect a bit further upside. Otherwise, we could expect a move back down. If they do see sustained selling, I'd be looking for a move perhaps towards a longer-term trend line, right around 51.50 or so by the time it would reach that trend line. Like I said, it's a pretty light week for data. Unless we see a movement on the back of that Federal Reserve meeting minutes on Wednesday night, I would not be surprised to see some sideways movement around the current levels. So I will end it there for this week, guys. Hopefully you enjoyed. If you did, let us know. Give us some love in the comments. Click the like button, and we'll see you in the next one.